Tonight, you will most likely be seeing, consuming, collecting, or handing out one of Hershey's products. Hershey is a company that I've owned in my dividend portfolio before and is a stock that has been tumbling recently. So in the festive spirit, today we'll be going over Hershey stock and analyzing the company itself and determining whether it's a good buy in our dividend growth portfolios for the long term. And if you haven't already, it's Halloween. Bless me with a treat by hitting that like button right now and subscribing. Also on Thursday, which happens to be my birthday, there's a huge announcement coming out in a big video, so keep eyes for that. With all that out of the way, roll the intro.
Hello, I like money.
Hide under your blankets for this segment because it's not going to be pretty. Hershey stock is down 31% from its all-time high of $272. And for a stock to sell off that much, something bad must have happened. But as far as I can see, nothing crazy has really specifically caused Hershey stock to crash like this. From what I could find that this year at least, the reason that Hershey could possibly be down, Ozempic, obviously that's a big thing for a lot of quote-unquote junk food stocks. You look at companies like Coca-Cola, Hershey, Pepsi, McDonald's, those companies are struggling because they're perceived as junk food and that apparently people have less craving for their products. I think this is one of the most irrational cases of selling of stocks in my investing journey so far in the career I've had. So I mean, it makes no sense whatsoever, Ozempic, the effect on it, and I think it could present a good buying opportunity. Now, unfortunately, these consumer staple stocks historically traded at a premium because of their brand value, the fact they're not really going anywhere, but Hershey's traded down over 30%. Right now, they're trading at a historically low PE ratio of 20.04, and that's not forward PE ratio. They're currently trading at $186 per share. Hershey owns so many diverse and iconic brands and products, it's actually ridiculous when you look at it. Mostly of them being in candy, but they are also branching into snacks, which I'll get into. Obviously, you have the Hershey products like Hershey Bars, Hershey Almonds, Hershey Kisses. They also have Twizzlers, York, Breath Savers, Bubble Yum, Kit Kat, Reese's, Jolly Ranchers, Almond Joy, and so many more iconic brands. It's actually ridiculous. Now, I mentioned that they were branching into more snacking rather than candy. They own Skinny Pop, Pirate's Booty, Paqui, Dot's Homemade Pretzels, and One Bar brands. Now they're also making new acquisitions recently as well, which has kind of ran up their debt as of recently, but I think those are obviously strategic acquisitions that are going to help them grow in the future as they're such a big and mature company. I think something very unique to Hershey is Halloween. Not many companies have a specific time of the year where they can sell a product and have it pretty much be in demand by the entire world. It's a really unique situation, and it's kind of awesome to get that kind of exposure. And if you just look around at some of the candy on Halloween, most of it's pretty much owned by Hershey. I guess you could say that Mars is the other company. So with their brands and their brand value, some could even say that Hershey may have a moat. That's not for me to decide though. I will say, though, Hershey does have very iconic and very strong brands, but that's obviously going to trade at a premium due to that. Hershey is diversifying their products away from candy, though, which I think is a good move long term, especially for growth. Obviously, I think candy is here to stay. People are addicted to it, and I think they are willing to pay a premium for their favorite candy brand, so that could indicate some pricing power that they have. It's not the strongest example of pricing power. Hershey has a market cap of $38 billion right now, and currently have a dividend yield of 2.56%, which is historically high for them. Alright, let's move on to the financial metrics of Hershey, which is mainly what this video is regarding. Let's start off with their revenue. Now, revenue is not the main thing that I look at when it comes to a company's financials and how much money they're bringing in at the end of the day. It's a good baseline, but it needs to equate to free cash flow, which we'll go over. They have a 3-year growth rate on the revenue of 9.75%, a 5-year growth rate of 7.32%, and a 10-year growth rate of 5.49%. I think the more accurate reading would be that 10-year reading of the 5.49%. But regardless, their revenue held up very strong, especially during 2020 when so many other companies had a decline in revenue. Alright, let's move on to the free cash flow. And ever since 2015, Hershey's free cash flow has been excellent. They have a 1-year growth rate of 13.95%, a 3-year free cash flow growth rate of 8.22%, a 5-year growth rate of 13.36%, and a 10-year growth rate of 9.19%. This is very strong, especially for such a mature company like Hershey, and it's honestly very impressive when you look into it. Now, I do have worries and concerns of how they'll be able to sustain that kind of free cash flow growth going forward, but I definitely think they'll be consistently producing a large amount of it. The growth is kind of where the question mark is, though, for me as an investor, especially somebody who's investing for the growth of future free cash flow growth. But I would definitely say right now the free cash flow has been solid, but the growth is kind of a question mark going forward. Another thing that we want to see with our companies is consistent and high profit margins. Now, for a company like Hershey, their profit margins aren't going to be on the same level as like a company like Visa, but Hershey definitely has some very strong and consistent margins as well. Currently, they have a 44.89% gross margin, a 24.29% operating margin, and a 17.11% net margin. And for a company like Hershey, those are very solid margins. And you can see over time that's kind of trended up, but it's mainly been flat, which is definitely what you want to see. No crazy years up or no crazy years down. So I definitely think investors that are looking for consistency, Hershey could be a great option for you. Now, for our dividend income investors, we're going to be going over Hershey's growing dividend, which has been very strong and offers some solid yield, especially with the great growth we're going to go over soon. Their 3-year growth rate on the dividend is 13.96%. They recently had an increase of 15.06%, a 5-year growth rate of 10.51%, and a 10-year growth rate of 9.39%. Right now, Hershey's dividend is definitely a result of the company's strong free cash flow in most recent years, but again, there will be a question mark of how aggressive that dividend could be growing in the future. Definitely those 14% hikes, I don't know if they're going to be able to sustain that for the next 20, 30 years, but I'd definitely be happy with 8 to 10% growth. For a company like Hershey, though, it'll definitely be interesting to see how they innovate for those future free cash flow growth that they're expecting. The easiest way to determine whether a company's dividend is safe or not is obviously the free cash flow, but there are some metrics we can look at, and we can look at that payout ratio compared to their free cash flow. Right now, their payout ratio is a pretty sustainable and healthy 42.86%, and even their payout ratio based off of net income, which is usually a higher or more unreliable metric, is still very sustainable at 47.12%. So, as for now, I would say their dividend is definitely safe. How sustainable at 15% hikes annually, I'm not too sure, but definitely at the moment it is sustainable based off of current financials. Another way that Hershey rewards their shareholders is by buying back shares over time. Now, unfortunately, they haven't bought back any shares this year yet, even though it'll be very interesting to see their next earnings report if they buy back any shares, especially since the crazy decline that they've had. That'll be very interesting, and it'll be a positive thing to see if they're buying back shares at these prices. Overall, though, financially, they look pretty strong. I think the big question mark for me personally is how sustainable will these crazy dividend hikes be, and how will they be able to grow in the future. That's more for a business analysis video, so I'm going to keep it to financials right now. But Hershey is definitely a company that's been on my watch list, and it's actually a company I used to own in my portfolio until I sold it and to buy Apple. But the only question mark for me is the future growth. And for the final part of this video, I'm going to be using the valuation tool from DividendData.com. DividendData.com is the tool that I use for all the research that I did in this video and the personal research I do on my stocks. It saves me so much time compared to online free resources, or if I were to do it myself, what would usually take me 2 or 3 hours would only take me 10 minutes on DividendData.com. I'd highly recommend you check it out. Try it for free for 14 days. The link's in the description. So finally, I'm going to run a DCF model just to kind of give me a ballpark range of where Hershey could be potentially fairly priced. So we plug in the current share price, I plug in the free cash flow per share, I plug in the projected free cash flow growth rate, which I put as 6%, which is way below what it's been recently, but the simulation is 50 years, so I'm going to put it much lower than what it is right now, and I put it at 6%, and I put a discount rate of 10.5%, which is a market return, and we get a present value of $180.33, which is just a little under where it's at today. Now, you gotta obviously factor in other things like your personal situation, but this could be an indicator that Hershey is approaching fair price. At the end of the day, Hershey owns some of the most iconic snack and candy brands in the world that are recognized and consumed by millions daily. With that said, though, with how mature of a company they are, and for my personal situation, I would need it to go down quite a little bit more for me to seriously consider buying back in. Keep in mind, I used to own Hershey in my portfolio, but at opportunity cost sold out. I will say this, though, this price is definitely attractive, and with their previous growth rates, if they can sustain half of that, I think that's a positive for them going forward. So, I'm going to be continuing to do more research on Hershey's business, future growth drivers, and more. So let me know your comments on Hershey stock in the comment section below. I'd greatly appreciate it if you leave a like on this video. It means so much to me. Do it as an early birthday gift, and I worked very hard on this video for you guys, so I'd greatly appreciate it. Thank you for watching. Big announcement Thursday, and of course, do dividend stocks, not drugs. Have a good one.